Good afternoon, Pete here. Just want to take you through a quick video around costing your products and all the different pieces that might be involved in going from a landed cost all the way through to wholesale and distribution cost. So I'm going to take you through this template today in a little bit of detail, just so you can fill it out yourself. So let's dive into it. So we know there's a couple of different parts of the spreadsheet. Number one is some data that will enter in at the start. Then it's kind of divided into this section here, which is all about your landed costs. Then we go into talking about how you might price up your first tier, your wholesale cost. Then a little bit of calcs around your recommended retail price or your shelf price. And then we'll look at a couple of different other scenarios, ranging from, if we're going to do a discounted wholesale price, a distributor, and then also just a little one at the end here where we're going to talk about a direct-to-consumer pricing. So with that little bit of an overview, let's dive into what this all means. So I'm going to start over here with this section here, which is all about your landed cost. So let's talk through the 5 different parts of this. Just a bit of a note here, anywhere you see these yellow cells here, that's where you can manually enter the data. Everything else is formulas, so don't touch that. So once you've entered in your product codes and your descriptions, a little bit about how many items are in each of your box, and some pallet details, which is what we're going to use to work out freight costs in a moment. The first real bit you're going to enter in is how much you buy that for. In this case here, we're buying stuff in euros. And so the first thing we're going to do here is convert that to Australian dollars. And the way we do that is this cell up here, we set a rate. We've been a little bit cheeky just to kind of put a bit of buffer in for our clients. So we put in a 5% little buffer, and then we end up getting an exchange rate that's a little bit more on the prudish side, just to kind of protect us if things move up and down. So that's really what part 1 is all about, is kind of getting what you buy it from your suppliers for, or get it from your manufacturers, and converting that to Australian dollars. Part 2 then is adding the freight cost, getting it from overseas into the country. And really the way we do that is, first of all, we've got to set how much a pallet is worth. At this point in time, these are just fictitious numbers. Let's say to get a pallet over from wherever your suppliers are, it costs $3,000. And then you've done a bit of a calculation here, and you can kind of go, well, how much actually fits onto the pallet? So therefore, for each of these costs, it's really just that number there divided by how many boxes on the pallet, and then how many items are in the box. And that'll give you a bit of an approximation for your freight costs. Part 3 then is some tariffs. Certain products have tariffs, certain things don't. So again, set what that tariff is worth, and then for anything here which might be tariff-free, just call it tariff-free, or zero that out. So that's really all about kind of getting your products into Australia. Then part 4, 5, and 6 are maybe some of the stuff that we have to include onshore. The first part of that is, of course, is warehousing and storage. So if you don't have a warehouse at the moment, and you're just putting it, say, in a space that you've got or in your garage, it's good to kind of factor in how much that might include if you're going to get bigger or outsource that. So really the way that's calculated is we're going to use these couple of items here. The first bit is how much does each pallet cost per week? And of course, that'll change whether you've got frozen or whether you've got dry ambient goods and things like that. And then the second thing we need to consider is how long does it take that a pallet to kind of go through? In this case here, let's say you need to order a pallet load of your goods every 10 weeks. Well, your storage or your warehouse cost, of course, is a pallet for 10 weeks. Now, with warehousing, yes, we're going to be going down, but warehousing will charge by the pallet. So that's what that cost comes from. And then really, we then get those costs and divide it by, again, how much fits on that pallet as a reasonable approximation. Part 5 then is, maybe there's some other repackaging or relabeling work that you might actually do. So we want to actually include that that labor cost, because you probably might be doing it yourself, thinking that that's okay now that you're just starting or you're getting the ball rolling. But remember, as you scale, you need to factor in some of those costs, and that needs to go into your true landed cost, or your true cost of business. So this part here is taking into account these numbers over here. So how many boxes do you repack an hour or relabel an hour, let's say? And then what is the labor rate? And obviously that'll vary. So essentially what we then do there is, what are these costs? Multiply by how much is in each box. In this case here, the scenario is that you might be relabeling the box, or maybe you're repackaging and things like that. So that's how we really come up with that repacking cost. Lastly, there might be some sundries you need to add to that, whether you might get some printouting of some labels, maybe you're disassembling some boxes and stretch wrapping them together or something like that. And these costs here are pretty straightforward. It's just, the cost per label or whatever you want to do. So you can have a play with some of those numbers. So therefore, you're getting a really effective landed cost, which is taking into account, obviously, how much you're buying it for from the factory, your freight cost, any duties, your storage, any extra labor and things like that. So it's a really good all-round cost. And that's really your basis for the business. From there, we can start having a think about how much should we then charge in terms of the customers that we go to. So let's take a look at those kind of price tiers that we spoke about, and maybe some thinking around the recommended retail price. So what we've got here is some initial approximations around the sell price, and that's based on the projected margins that we want, as well as essentially what we think the markup should be. It's a bit of an approximation. Some people will have a different markup or a different expectation on how much they want to make per product. So as much as we've got some numbers down here, don't keep them set in stone, because they do vary. From then, we might actually want to have a bit of a play with some of these numbers. Let's say for this one here, we might not necessarily want to go over $11, so we can play back and wind back that number. So things will come up and down. So once we've set that wholesale number, we can then do a reflection on what's actually the effective margin. And in this case here, margin is how much you sell it for minus your landed cost divided by how much you sell it for. So it's those two numbers there. Remember that landed cost that we just did? Now we can actually take a look through and go, are these reasonable margins? And then also, this is an average of our overall margin. And that really is traditionally the baseline of the business, your wholesale price. Once we've got to that, we then, because that's essentially, let's say we're selling to Metcash or Coles or anybody like that, that's really what we sell to Coles. And then, of course, the recommended retail price is then how much does Coles sell it to the end consumer? And that's really what this recommended retail price is all about. And the way we do that is again, is a bit of a three-part process. So the first part is what we've called here recommended retail multiplier. Best way to think about that is almost like a markup. In this case here, you can see that we're selling it for, in this case here, $9.95, multiplied by a markup of 60%, and we get a bit of an approximate number here. And that's a bit of a guide. What we then want to do is maybe consider in part two, what are our competitors? Who else sells our similar products? And can we kind of see some like for like numbers? Maybe $15.95 is a little bit too expensive compared to our other competitors, so we might want to wind that down. And that's really what we then do in part three. You can, again, anything in yellow is numbers where we can edit. So in case we might actually want to go, well, actually $15.95 is perhaps on the high side. Maybe it should be more like $14.95. and then that becomes our baseline. So that's that three-part process to say, well, actually, this number here is what Joe Blow sees out in the general domain, and that's really what we sell to our stores. Once we've got this baseline wholesale price and our recommended retail price, let's take a look at three other different scenarios. The second price tier we might think about is a discounted wholesale price. You might have a really good VIP customer that you might want to add a 10% discount to. And that's a pretty simple number that we can add to. And really all that's doing is grabbing this discount and multiplying it by that recommended retail price that we had there. And of course, you'll see that margins then change. And of course, we can see it's overall drop from best part of 23% down to 15 odd percent. So that's a pretty straightforward thing, and that's where we can start having negotiations with our suppliers, or our customers, to say, if they're demanding a discount, what is that actually going to have on our business, and more importantly, what is that going to have on our margin? The third price tier is distributors. Now, this is a bit of a complex one. If you think about in this first scenario where we're going from us and we're selling it, say, into Coles. In this case here, we're selling it to Coles. So the difference here is this distributor wants to obviously make a profit. So what we've done here is, how much does the distributor want to make in terms of their margin? And we've got to factor that in, because obviously we need to sell it to a distributor. They then sell it to Coles and Woolworths at, remember, that wholesale price, and then Coles and Woolworths then sell it to Joe Blow at that price over there. So really what we're saying here is, for a distributor to make a 30% margin, that we need to sell it to them for $6.98, because we sell it to them for that much. They then sell it to Coles and Woolworths for that much, and then everybody's taking a piece of the pie along the way. Last little bit here of summary. Don't worry about this, folks. It looks like there's a bit of a bug. I'll clean that up later when you get the proper template, so don't worry about that. The last little bit here then is price tier 4. You might be thinking along the way, hey, especially in the distributor, everybody seems to be taking a clip of the profit. So this is a bit of a scenario where we're selling direct to customer. So what does that mean? Instead of that landed cost being converted to a wholesale price and then converted to a retail price, we're really going straight from there to our retail price. And no surprises there, we're getting quite a sizable margin. Now, of course, the downside of direct to customer is, do we get the volumes? Yes, we're enjoying, in this case here, 52% margin, but how much could we possibly sell direct to customer versus, say, a distributor who might have a national network? So we've got to balance up the idea of how much volume we've got versus actual ultimate margin. And the good thing about this, guys, is this spreadsheet does it all for you. There's only, any of these yellow bits here are really the only places where you need to add some numbers or have a play with some numbers. But then this should provide a really good understanding for your overall cost, and then how much you might be able to sell them for as well. So I hope this has been of assistance. Please reach out to myself or Mia, and to be able to take this through with you a little bit more detail if you'd like. Hope this has been of help. We'll speak soon. Bye, folks.